There's a lot of families in Arkansas that have helped build all the great things that we have. We shouldn't have to go to other places to get the capital, and they should be able to take advantage of what's going on.
Keep the resources here.
Workforce and affordable housing for folks in the region. It's getting harder and harder to find that.
I mean, it's a sensitive issue. The fact that like someone who is here, it's different than someone who's in LA or New York or Dallas.
Absolutely.
You may not be able to answer this question, but when you look at the funds, is there heavy allocation towards real estate? 10% of it is company focused, the other 90 is real estate? Or
The best case study that we have is he wanted a capital partner to kind of help take to the next level. That was 3 years ago.
how much of the outside capital can you see in 2026?
Yeah.
We want to give a special thanks to our presenting sponsor, Greenwood Gerhardt. Starting with my parents, for years, they've helped my family feel at peace by having a team we can trust build our finances for the future. One thing I love about Greenwood Gerhardt is how directly involved the team is in the holistic planning of our finances. We can regularly check in with our advisor and know that they see the full picture of our family, even between generations. I know they're adding immense value to so many lives here in Northwest Arkansas. And to learn more about Greenwood Gerhardt and their suite of services, you can visit their website at greenwoodgerhardt.com or hit the link in the show description. Now, let's dive into the episode. Afternoon, Brad. Thank you for coming on here with Nick and I.
Yeah, happy to be here, and thanks for having me.
Yeah, absolutely. So Natural Capital, give us kind of a high level for those who aren't aware, maybe you're not in the financial space at all. What y'all do? What do you do?
Yeah, so we are a relationship-driven private investment firm. We have offices here in Fayetteville, Bentonville, and Little Rock. And we invest in, what a private investment firm means is we invest in real estate, primarily here in Northwest Arkansas. So housing, office space, medical office, and industrial space. Mm-hmm. We would own that. And then on the company side, we primarily partner with founders and invest in their business, privately held companies. That's what a private investment firm does. Mm-hmm. So, we've been doing it now for almost 7 years.
And the structure, it's a fund structure, correct?
That's right.
And so you raise a fund, deploy the capital, raise the next one. Is the goal to get capital back from the current fund before you start raising for the next one? How does this work for someone who's not familiar with the way this?
So when we set out, we wanted to be a platform for investors, primarily here in Arkansas and Northwest Arkansas, to be able to participate in private markets, private investment. Yep. It can be difficult for people to access or find those investments. They are private by nature, right? Yep. And so what we do is we raise a fund. It's a pool of capital from investors, most of them local here in Northwest Arkansas, primarily families and family offices and individuals. And then once we've raised that capital, we go deploy it. We go make investments, both here in Arkansas and Northwest Arkansas and throughout the Heartland region. Yeah. And so then once those investments are made, we manage those. And when we feel it's appropriate, we will exit those. Mm-hmm. And along the way, there's cash flow that's, that is generated by those investments. We'll send that capital back to the investors. And then when we have exits as well, we will send that capital back to investors. The idea being that, they're putting $1 in and hopefully they get more than $1 back over the portfolio or over, call it 12 to 14 investments that we might have in a single fund. Yeah. And so you can think about a fund almost like its own company where it has a lifespan. And so we're looking to acquire, manage, exit over a period of time, usually call it 5 to 10 years is how long we might hold an investment.
And which fund are you on now?
So we are, we've raised 2 funds. Fund 1 was we started in 2019.
Yep.
And we are still actively managing assets within that fund. And then Fund 2, we launched in 2022.
Mm-hmm.
And we're actively managing assets in that fund as well. Both funds have had exits recently.
And good exits too. I mean, it's like, I think it's been, for people who are not in this world, I think the really interesting thing from my perspective is, you want to have a firsthand on and be an active participant in the appreciation in the market here, and whether it be real estate or business related. I think for people who don't understand, it's like the ability you're offering, giving different people and offices the ability to invest in these things is really unique. And was anyone doing it at the same scale that y'all are right now?
Yeah,
locally.
Yeah, so private investing for private firms historically in Arkansas has been minimal, or in some cases non-existent. It's always been the large families that everyone knows about that has driven private investing in the state, and we're very happy that they've been willing and able to do that over the years because of all the good things that they've driven through that. But they typically invest their own capital. They don't pool capital or raise capital from others. And so we saw an opportunity where we could be that platform for families. There are others in the state, a couple that do that. But they have different strategies than we do. And so because of our different strategies, we can be friendly with them and where it's not competitive. Same with the large families where we can all be looking for opportunities here in Arkansas and the region, and in some cases be collaborative, and in others share that information but not necessarily partner on a transaction. So it's so it is still a relatively small industry in Arkansas. Obviously not throughout the country, right? I mean, there are firms like ours in all the major metropolitan areas that, and where we saw the opportunity is people here, whether it be on the investment side, people seeking investment, or on the investor side, looking to deploy capital, there's a local offering that they can take advantage of if that's something that interests them.
And what was the spark inside you that made you want to go to do this? I mean, obviously, we've talked to a few of your partners now on the podcast, but primarily about their other businesses. And we haven't really gotten to dive into the full natural capital story. But why did you do this?
Yeah. So, my partners are Marshall Saviors, Todd Simmons, and Brock Gearhart. The founding partners, other two partners are Rob Kimball and Ben Hernsberger. And, the idea for natural capital really came from Marshall and Brock. So, their businesses, right? Marshall's business is Cushman Wakefield Sage Partners, real estate brokerage and leasing firm. As Marshall will say, they had as much money trying to come in the door as they had going out. Really more coming in the door than they had going out. And there really wasn't a way for them to aggregate that or put that together where people were asking him, how do I invest in real estate?
Yes.
And then Brock, with Greenwood Gearhart as an investment advisor, similar, his clients were asking him, how do I participate in private markets, right? I want some diversification other than the public markets. Neither Greenwood Gearhart nor Sage are set up to really do what we do in-house.
Yep.
And Marshall and Brock are busy running their
businesses.
Businesses. And so I've known Marshall since the 8th grade.
Both grew up in Little Rock.
I've known his wife Beth since kindergarten.
Wow.
So there's a lot of trust there. And before Natural Capital, I was managing an investment fund for the state of Arkansas, an economic development lending and investment fund for the state of Arkansas. And, that was great. And it was a great place to learn. It was very fulfilling to be able to have a hand in growth throughout the state, right? From Little Rock originally, from, went to Hendricks and then the U of A. So I'm an Arkansas guy through and through, and an Arkansas family through and through. And so Marshall and I were catching up. Normally we catch up about kids and the hogs or whatever else. And all of a sudden he starts asking him questions about, am I happy? I'm doing what I'm doing. And, it just kind of was a different type of conversation.
Yeah.
And so then a couple weeks later, I was with Brock and we've known each other for a long time. And that's when they started talking about this idea that ultimately became Natural Capital. And it was just really exciting to say, okay, well, I'm doing this for the state on behalf of the taxpayers, essentially, and helping grow the state. What if we went and did this for effectively our friends and family and close relationships, and something that we could build ourselves to? And Todd came along pretty quickly after that, and they're obviously a big Northwest Arkansas focused family. They love the idea of being part of something where we kind of like, we can do this here just as well as, having capital come in from outside.
Yeah.
And so that's what we set out to do. And so we've been doing it for 7 years.
Yeah. I imagine that was somewhat of a driver. It's like seeing a lot of this outside money coming into the market.
That's right. And really, there's a lot of families in Arkansas that have helped build all the great things that we have. And we shouldn't have to go to other places to get the capital, and they should be able to take advantage of what's going on, right?
Yeah, keep the resources here.
That's right. Where they don't feel like they're shut out of what's going on. And so that was a big driver for us too. Now, we still want to make money for our investors. And so that may mean ultimately selling to, a national or regional firm. But at that point, we're all doing. It's a positive outcome for everybody involved.
Is that hard for you though? When you see, talk about like the office deal you just sold.
Sure.
That you can look on Talk Business and see what you bought it for, what you sold it for. Is like, hey, it ended up being a great deal.
Yeah.
But something like that is like you also see kind of long-term 10, 15, 20 year view. Is there an internal conflict there?
There really has been, especially as we've matured as a firm of, okay, well, how do we, one of our core values is impact, right? And so we describe that as how we have an impact on the community and the region positively. And, and of course, an easy way to do that is to hold assets long-term, continue to reinvest in them and build them up along the way. We also have to manage generating a return for our investors. And so that has been, we try and balance it, right? Ultimately we've got a job to do, a fiduciary responsibility to manage the capital as best we see fit. So we try and do both, where without one kind of really overriding the other, right? The North Pinnacle transaction, we actually sold that to a local group that will Orion Capital Partners. They were our partners in the original transaction. We owned half, they owned half. And they were excited about the opportunity to own the whole thing and, to be able to sell to a great steward of the asset that will continue to reinvest and grow it. It's perfect for us, right? It generated a great return for, it was the right time for us too. And so,
are there ways that over time, since you guys have matured, that you've gotten more creative in the fund structure to be able to return capital to investors without necessarily selling maybe as much of those investments?
I think we are very focused on generating returns along the way before an exit and not relying solely on an exit. That's actually been a core tenet of the firms since we started it. And so, we've been able to do that. And I think that helps build trust with our investors where it's not just a return on a piece of paper, right? They're actually seeing those returns along the way. And then, of course, the exits are nice because those are big pops.
Yeah. Well, and talk about, so why real estate and companies?
Yeah.
I mean, and is that for folks that don't know, who aren't in this space, is that like an industry standard, national industry standard, or is this, hey, we were just trying to get creative and kind of play both sides?
Yeah, so it's not industry standard because we invest in both asset classes out of a single fund. Most firms like ours are not generalists. They have a very specific niche, even within an industry of an industry, right? Like we met a firm actually last night that they are student housing investors in tier 1 markets with tier 1 big schools, right? I mean, that narrow. We're the opposite of that. And that's driven by two main reasons. If you look at the backgrounds of my partners, they're all varied, and none of us come from traditional private equity. And so if we only focused on a specific niche or a specific subset of an industry, then it's like, well, why would they be involved, right? If it was real estate only, why would Todd be involved, right? His background's in companies. Same with me. If it was a company only firm, why would Marshall and Rob be involved right there? Sure. And so it really made sense to have a diversified portfolio. We're obviously regionally focused, which if you're regionally focused and industry focused, that's a tight area to really try and find good opportunities. The other reason that we did it is we wanted to provide diversification for our investors so that, there's different characteristics to a real estate investment versus a company investment, right?
What are they?
So traditional real estate, if we buy an asset, most likely it's going to kick off some cash flow. If it's a good investment, that can be distributed along the way. Whereas the companies that we invest in, they may be reinvesting for growth.
Yep.
And so there might not be cash flow coming back. So while we wait for those, those companies it's better off for them to reinvest that capital than return it because the return on investment is stronger. While we wait for that to mature, we've got cash flow along the way from real estate that allows us to make those distributions back to LPs.
Sure. And on the company side, obviously with the real estate, you have the cash flow from the asset and the exit. On the company side, you're just kind of waiting on the roll up to private equity? Or is that?
Yeah, generally, yes. We are not, we have a couple company investments that make distributions along the way, but generally they're all reinvesting for growth. And then our return will be based on whenever they exit, whether they sell to a strategic, larger company in their space, or, maybe they sell to a larger private investment or private equity firm. Or theoretically they could go public too. We generally play in the lower middle market, which is kind of 2 to 15 million of EBITDA. And so so it's less likely they go public, but that's also theoretically. Yeah.
Walk us through, like, for someone who's listening who knows business, but they don't know private equity or private investments, walk us through, hey, we have a fund open.
Yeah.
The minimum investment is X amount. Here's what distributions could look like. Are they monthly? Are they quarterly? Are they annually? I'm sure it's different by fund. I mean, just walk us through for someone who isn't familiar with your space.
Yeah. So I have to be a little careful. We're a registered investment advisor, which we're registered by the SEC. We're registered with the SEC, the Securities Exchange Commission, and they have very strict rules on what we can and can't say publicly.
Sure. Okay.
That looks like marketing to the public, because there are specific rules around the the type of investor that we can market to or solicit to, and that's based around income and net worth. So probably shouldn't answer that question that directly.
Is there an industry standard? Is there a blanket, or is it really based off of, okay, the type of investor you're going?
It's
going
really every firm probably has a little bit different strategy. And so, we do focus on making distributions relatively early in the fund's life cycle. Other firms may, it may be 5, 7, 10 years before they make distributions, and really that's based on their strategy. Usually they're trying to hit grand slams, or they might be investing in a way that they're trying to 10x someone's money, or have a a very large multiple. We're very much a kind of doubles type investing, where firms like that may invest and they may be comfortable with zeros, right? Taking that level of risk, that kind of binary risk, but they know 2 or 3 of them are going to pay back the whole fund. We'd rather be a little more conservative, where by and large our kind of bear case or negative case scenarios, we're still getting our principal back, right? And then looking to still kind of hit those doubles, and occasional triple is nice too, but not trying to necessarily knock it out of the park and take significant risk that goes along with that type of return.
Yeah, talk about evaluating that when opportunity comes to your desk. Deal, real estate deal, business deal, whatever you call it. What is evaluating that opportunity? How does that look like internally for you guys?
Yeah, so we have our investment pillars, which starts first with the relationship. Has this opportunity been brought to us through a close relationship, or directly from the person that's bringing it to us? That's very important to us. We can look back and say, okay, the better the relationship, the better the results we've had.
When I'd be surprised, I mean, just you and your partners, just the deep relationships that y'all have here. I mean, I'd be surprised if you said you weren't getting just a lot of kind of people saying, hey, because they want to they know you, they want to do business with you.
That's right. And, you take the network effect of 6 people that have been building their careers separately, but had a relationship over time, and you smash that together, and there's some pretty significant network effects where, whether it be locally or regionally, we've got what we feel like are really strong relationships throughout that bring us investment opportunities that are generally off market, meaning there's not a broker or an investment banker that's kind of pushing those. And so that's really been part of our secret sauce. So that's number one from a pillar standpoint. We're looking for proven momentum, right? We're looking for we are not turnaround specialists. There are firms out there that do that can come in and acquire or invest in an asset that, whether it be real estate or company, that may be struggling, and they can turn it around. That's a very specific skill set. We definitely want to add value and help increase the value of the investment. But so we're looking for proven momentum, strong management team. If it's real estate, an A+ location.
And momentum on the real estate front. I mean, but you're still investing in ground up developments, correct? I guess I assume the momentum from like the developer or the team.
Yeah. So we will do both ground up development or existing asset, right? And so that momentum and the location can be right. Obviously, Northwest Arkansas has a lot of momentum behind it, and from a growth standpoint. So that's why we want to invest from a real estate standpoint in high growth markets like Northwest Arkansas, because it just gives you a little bit of room for error, where you don't have to be like, if you've got 10 points in your thesis, you don't have to go 10 out of 10 for it to still be a good opportunity and a good result, you only have to go 7 or 8 out of 10, right? And everything doesn't have to go perfect when you've got tailwinds behind you.
And I mean, my background is the real estate front, so I've definitely got more things turned into my head on the real estate side. When you're brought an opportunity on the real estate side, are you you an LP partner? Are you a GP partner? Like where do you fall in the capital stack? Are you given mezz debt? What does that look like? Is it the same every time, or is it, hey, we're kind of trying, to?
So the short answer is it is not the same all the time, and yes. So we've been an LP partner, we've been the GP, we've provided both equity and mezzanine financing for projects. And we pride ourselves in being creative in the structure that finds a balance that achieves our returns while making it a really good opportunity for the person on the other side. That is but we don't have a one size fits all or a kind of cookie cutter deal structure for either companies or real estate, right? We want to figure out what's best for both sides, and hopefully on the front end structures a great outcome for both on the backside.
What do you tell folks that the value that natural capital is bringing outside of the money to whether a company or real estate?
Yeah, and I think it's just the expertise and the experience and the willingness to, we do not come in and try and run someone's business or, especially in the form of a ground up development, tell a developer what to do or how to run it. We want to be the capital partner. We want to be value add from a strategic standpoint and lend an ear for if they need help or advice, or it's like, hey, have you ever seen this before? Or, I'm thinking about this. What do you think? That kind of discussion. But not trying to basically push someone aside and, it's their project and we want to be helpful in building that and just be part of the team. Because we feel like those types of partnerships will generate better returns for everybody if we follow that path than just trying to do it 100% ourselves.
Yeah. So what does that look like if you acquire a business or provide capital to a business?
Yeah.
Like what is that? I assume every deal is different, but what does it generally look like?
So we like to be minority investors, meaning that we don't own a majority of the business. We like to find CEOs or founders that have proven they can grow a business to a certain point and lead a business, and that they want to stay in it and keep growing, and that they may just say, I could use capital for growth, or maybe M&A, both organically or inorganically, so acquisitions, or maybe they need to reset the ownership structure, right? There's a lot of ways to use the capital, and along the way, I want some strategic advice and help, and so in many cases, we'll sit on the company's board, right, where we're managing the investment, we're monitoring what's going on, but we're not, in the day-to-day and just helping with strategy.
Do you have a case study you could point to of like, hey, I mean, I know it's the fund's not, the company in general is not that old. So I imagine like in 2020 is when everything first kicked, your first acquisition, correct? Kicked off?
Yeah.
Yeah. And so is there a case study on the company side?
On the company side? Yeah. So the best case study that we have is Harvest Group. And so it's not overly public that we are an investor in Harvest Group. And so that's a perfect example is Ross Cully, CEO. He's the first guy y'all interviewed, right?
Yeah.
And
amazing guy.
He wanted a capital partner to kind of help take Harvest to the next level. That was 3 years ago. And so we've sat on the board. Todd is our board representative, and I'm in those meetings as well. And so, and when, when Ross needs, maybe an outside perspective or help thinking through something that he's working on the management team with, he'll give us a shout, and we'll obviously help him do that. And excited that we could be part of that journey with Ross and help him get to the next level.
That's awesome. And I assume over the course since y'all started in 1920, y'all have had some venture opportunities. That's not your focus, but
That's
I assume, and then I assume with your background and what you did for the state, you had a lens at that part of what we've done in Arkansas and then what you're doing right now. And so why have y'all chosen not to do that, not to pursue those, or have you? And what's the perspective on that?
So when I was with the state, a big portion of our portfolio was traditional venture and early stage investing. And those can be great outcomes, and they can be difficult outcomes too. In many cases, very binary, right? You either win or you don't. And ultimately, it just came down to risk of why we have chosen to be supportive, right? Where we go to the events. In some cases, we help sponsor the events. We're a friendly ear to the people that are helping continue to grow that ecosystem, and both up here and in Little Rock, and a friendly ear to founders that are seeking to raise capital, maybe for the first time. Maybe they're looking to raise an angel round or a Series A, where it may not be something that we're going to do directly, but maybe we have a relationship with someone that would be interested, or we can, say, hey, have you thought about these few things in your strategy as you get ready to go out to market? And so we view that as a positive for, obviously, just to support the region and the community, the entrepreneurial ecosystem. Selfishly, that deal might come back to us too, right? When it's when they're raising another round of capital, or when they do grow to a point where we feel like that it is a fit for us, from an investment standpoint.
So you said low to middle market, like, is that pretty firm 2 to 5, or like y'all have had stuff outside those parameters that's just your like normal?
That's right.
Okay.
Yeah.
Cool. No, you're good.
And so I want to get a little more of your story too.
Yeah.
So obviously you kind of said what you were doing here before for the state. How did you for someone who's trying to, pursue the same career path, or how did you get to where you were?
Sure.
From Little Rock to...
Yeah. So born and raised in Little Rock, still live in Little Rock, even though we're doing the NWA Founders. I spend enough time up here. I guess I'm a honorary citizen of Northwest Arkansas. But from Little Rock originally, went to Little Rock Central, and then went to Hendrix College for college. Then came up here for grad school at the Walton College with a degree in economics. Moved back to Little Rock, and we've been there for 18 years now. So my wife and I are both from Little Rock. We've got 2 kids, 15, will be 15 on Monday, 15-year-old daughter on Monday, and then a 10-year-old son. And so we've been back in Little Rock ever since. I actually started with the Arkansas Economic Development Commission right out of grad school on the policy side of, helping shape, at that time, Governor Beebe's economic plan for the state. I was the researcher and the kind of the analyst on helping build all that out and a long time ago. And so a big part of that strategy was, how do you support and build a tech entrepreneurial ecosystem, right? That was a very nascent thing in Arkansas roughly 20 years ago. And through that program, I didn't even know what it was. Didn't know that something that this existed. And through that research, kind of understand, okay, all these other states are trying to build this in the in their own states. And so Arkansas should try and do the same. There were some programs created through that initiative, and ultimately somebody needed to be kind of the point person for those programs within the state. So I raised my hand and said, I'll figure that out. And so I did that for 6 years. So spent a lot of time coming up here from Little Rock to Northwest Arkansas, spent a lot of time at the U of A Research Park and other spots where there was tech entrepreneurial building going on. And so after about 7 years of that, left and went and worked at Stevens Inc. In equity research. So what that is covering publicly traded companies, and reviewing their performance. And quickly learned that public markets were interesting, but not really for me. And loved the time that I had at Stevens. And then about that time, some of the leadership at the state called back and said, "Hey, would you like to come run the portfolio that you had been working on as an analyst?" And so I jumped at that opportunity, and so did that for another 6 years before we launched Natural Capital. And the thinking being that fund management and, having firms like ours at that time, when I went back to the state, that it didn't exist. There was really one in the state at that time. I was like, well, I'll go back, do this for the state. It's what I want to do. It's where my passion is. And worst case, I'll do this for a long time for the state and help hopefully build some really cool companies, be part of building really cool companies that are located here in Arkansas. As we got into it more and more, just continued to, like, okay, this is what I should be doing. And the opportunity to transition to Natural Capital presented itself. And it's like, okay, well, let's go try and help build an industry in Arkansas and build a firm here located here in Arkansas of doing what I was doing for the state.
Yeah.
How much, now that you're sitting where you're sitting, how much of the outside capital can you see in 2026 than when you guys started in 2019?
Yeah. I don't think we expected, right? We manage a little over 200 million today, about 215 million per our last AUM, give or take a couple million. If you had asked us when we started, could we get to where we are? It's like, okay, maybe, but we've been, it was really just about what type of service can we provide to our investors, and if we do a good job, then it would grow from there.
I say, talk like the investors. Maybe talk about like raising the first fund, and you're bringing a new offering to the state that hasn't really existed in the same way. I mean, people obviously responded well. Did that take longer than you thought, or was it faster than you thought? Or
we did it in the middle of COVID, so that was something. We launched the firm in the summer of 2019, and most firms, I mean, usually you take about 12 months to do the fundraising. That's pretty standard in our industry, and so we got to started that in the fall of 19, and then in the spring of 20, right, everything changes. So it definitely took longer, but there were some extenuating circumstances, I guess. But yeah, I mean, we just went to our closest relationships that we have and asked them to take a bet on us, and they did. Yeah. We didn't really know. We thought we knew how the market would respond, but we weren't sure. And so it did resonate with some of our closest relationships. And so I had a banker in the state once we got going. It's like, well, how'd you raise the capital? And it's like, well, we went to basically our friends and family and close relationships. And he's like, oh, okay, so then if it doesn't go well, you're not going to have any friends and your family's going to be. And it's like, well, we thought about it, the difference between a bank, we thought about it the opposite. We're like, well, we're going to go do great things with this and generate a great return for our closest friends and our family. And but yeah, we did take a risk and, as much as our own capital, right, we invest in all the funds ourselves as well. We took a lot of reputational risk as well to kind of put ourselves out there to try and build something that we can be very proud of.
And the first acquisition was in Little Rock, correct?
Yeah, that's right. First investment we made was the doctor's building in Little Rock, which is a 8-story medical office building in Midtown, right on University. That was the fall of 2019.
And have you sold that?
Still got it.
Okay.
Yeah. We still have it, and still manage it, and are continuing to work it.
Yeah. What was the first Northwest Arkansas acquisition?
So the first Northwest Arkansas acquisition, we call it Heartland Affordable Housing, is an affordable housing portfolio we acquired in October of 2020. It is approximately 25 different locations, so different units throughout the region in Northwest Arkansas, primarily Northwest Arkansas, Mountain Home, Harrison, and then a couple down in Cabot. So we acquired that from an Arkansas family here that had built those, and they were ready to exit it, and so that was the first one, and that's a way that we feel like we're back to the impact and generating return is that we're helping make sure that our part in having a role in providing workforce and affordable housing for folks in the region. It's getting harder and harder to find that, and so that was October of 2020 when we made that investment.
Well, and it's a sensitive issue, and I think for people to understand the fact that like someone who is here, having ownership of it it's different than someone who's in LA or New York or Dallas
Absolutely.
who doesn't drive by it or see it.
That's right.
Or run into those
right.
people.
I mean, we drive by our properties all the time. We, visit them. We have local property management that we use. So everything is from that standpoint is local, and we take great pride in that and also we have our investors that are driving by that. And so they know that they own that. And so if it is not being properly managed, more than likely they're going to hear about it, and then we're going to hear about it. And so it's very important to us that when we, of course, our assets that aren't in the region, but those that are in the region, we take great pride in.
And so the first fund all has that been, I mean, do you call it fund closes, or what happens what's the end of the life cycle?
So we call it fully allocated. So we've invested that capital, and so then we are managing that portfolio, and then we'll look to wind that down over the next few years as the assets fully mature and exit.
How's it performed?
I can't talk about that.
Okay. Yeah.
So we can't. Sorry, we can't.
No, I get that. I
discuss performance in what this would be considered a public venue.
Yeah.
So Fund 2 is also fully allocated.
Yeah.
And which just happened this year.
Congrats.
Yeah. And so managing that portfolio as well, and then kind of thinking about what's next.
And when you say fully allocated, so I think the first fund I read was like 41 million. Does that all go in? Y'all say, hey, it's open for a year. That 41 million goes in the pot for a year, and then it takes you a couple of years to fully allocate it. Is that kind of?
Yeah, that's right. With one little caveat. So it's called a committed capital structure. So you commit to you make a commitment on the front end. and then we call that capital as needed as there's deals. So it usually takes us 2 to 3 years to call that, and through making investments.
So if I make a commitment of $1 million in Fund 1, I may not actually give you the money until a year, whenever a deal comes up and you.
That's right.
Okay.
So like Fund 1, it took us about 2.5 to 3 years to fully call that capital. Right.
And is that
same with Fund 2?
Okay. And is that fund structure pretty common in your industry? Okay.
Yeah. So you get the commitments up front. Usually because you don't have all, you may have 1 or 2 deals identified, but you don't have all of them. So 1 and 2 both have 14 investments in each fund. And so it obviously takes time to get those identified, do the diligence, and close. And so rather than taking everybody's capital up front and then it just sitting there for a period of time, we call it as needed.
Is that industry standard?
Yeah. Yeah. And some people do it faster, some people do it slower, but yes, it's the committed capital structure is very industry standard.
And then is your goal for each fund, are you guys like, hey, we want to be at this level, like, or is it's open for a year and the first fund just happened to raise 41 and then the second fund happened to raise 80?
We definitely have goals.
Okay.
And so I think the goal for Fund 1 originally was probably closer to 20, and then we were able to exceed that. The goal for Fund 2, we definitely wanted to materially increase that, which we did, right? And I think, so we always have goals, and it's really just about, okay, what amount of capital do we need to execute the strategy from an investment standpoint in terms of the types of investments that we want.
And then has the investment strategy shifted over time? And if so, what shifts have there been? I know when I was looking through some of the investments you made, it looked like a lot of them were in the multifamily or housing space.
Yeah, from an industry standpoint, not really, nor a regional standpoint. I think the biggest switch that we've seen in the last few years is being much more conscious about when we feel like that the value of the investment has been maximized, then it's time to strike and go ahead and make that exit. Versus going, oh, well, we'll hold it a little longer. When we feel like, okay, this is about as good as it's going to get, then we need to go ahead and strike, rather than think about it more of where it's like, oh, we have this asset, it's doing great, but if we do hold it, even though it'll perform fine, is it really truly kind of going up to the right, or is it kind of plateaued? And so now we need to go ahead and look for an off ramp.
That's good.
And so Fund 3, is that being talked about now, or does that when does that come in conversation?
Yeah, so Fund 3 or future offerings, again, can't talk about that in public, but
I'm assuming that's the next step.
We are a growing firm.
Yeah.
And so we don't expect to slow down anytime soon.
And what does growth mean? Let's talk about Northwest Arkansas more in particular.
Yeah.
Like, how do you see growth in Northwest Arkansas?
Yeah. So I think, obviously, you saw that, Northwest Arkansas was #1 on the Milken list. I think everybody has talked about that a lot. And so that is a really good indicator of not just growth, but stable growth, which we feel like is just as important than growth, right? You can see kind of spikes in different, from a growth standpoint, and then they have lulls and spikes and lulls. And we feel like that the region is set up really well to have that kind of continued growth at, 35-ish to 40 people growing, moving in, was it a day?
Yeah.
And so, that gives you a good base, along with the stability of of course, the university, Washington Regional, Mercy, all the large corporations, and just a lot of opportunity in front of us, where the region's almost between 650 and 700,000, on its way to 1 million. And a lot of runway for us too, because as much as you hear about the national and regional capital coming in to look, they're still like, well, do I put $1 here in a fast growing but secondary MSA, or do I stay in a Dallas or a Chicago or LA?
Sure.
And so, which we like, right? It gives us more opportunities. And so we're glad that they're looking, and we're also glad that we still have some runway before they're really coming
Really here.
strong. Yeah.
Talk about the growth of Natural Capital, the team here, the
Yeah.
resources that y'all have kind of put into this, the offices, who's doing what.
Yeah.
Kind of,
So when we started in 2019, I was the only full-time person, right? Todd, Marshall, Brock are obviously have their businesses that they run. And so now fast forward to today, we have 12 people on the team, right? Both. And so that includes myself, Brock Earhart, Marshall Slavers, Todd Simmons, Rob Kimball, Ben Hernsberger. We have 3 investment analysts up here in Fayetteville, Hayden Henry, AJ Hayes, Brennan Anderson, Rachel McGee handles our investor relations and marketing. And then down in Little Rock with me is myself, Denny Moss, our CFO, and Amy Bagnall, our Chief Compliance Officer and General Counsel. So that's the team today. I think there's could be opportunities to continue to grow that. Like we've got Austin, Little Rock, here in Fayetteville, and then Bentonville as well. And we feel like it's important to have offices across the state, because while there's a heavy focus on Northwest Arkansas, we want to be a statewide firm. We have relationships throughout the state. And so being able to have those locations is really important to us. And we feel like serves the company and our investors in the best way possible.
What do you see opportunity-wise for company investments in Northwest Arkansas for the future?
So there are a lot of businesses, obviously, in the retail space, right, in and around Walmart. In the industrial services space is something of interesting. That's very interesting as well. Those are the 2 areas probably here locally that we've seen the most opportunities, and I think we'll continue to grow and help the region diversify.
and when you say industrial services, give a couple examples.
It could be
cold storage, stuff like that.
It could be cold storage. It could be plumbing, HVAC. It could be all different types of services in that space. Yeah.
You may not be able to answer this question, but when you look at the funds, is there heavy allocation towards real estate? Like, is there we 10% of it is company focused, the other 90 is real estate? Or
no, I can't answer that one.
Okay.
Because we are able to talk about our specific investments. And so Fund 1 was probably 55% real estate, and Fund 2 was about 58. So the goal at the beginning, and that's on a dollar basis, the goal is to generally try and hit 50-50, but if we're a little skewed one way or the other, then we're comfortable with that. But no, it wouldn't be like 80-20 or something like that. And so we do want to try and provide a balanced portfolio for our investors.
And how much of those businesses exist in our state for people who are like, I didn't know. I mean, I think it's clear on the real estate side. Anybody who's been here, read the news, like that's clear. I think there's probably a lot of people listening to this that are like, oh, okay, like those are fairly large businesses and across the state. So maybe just share your perspective on that.
Yeah, there's only so many of those that meet the criteria in terms of a industry focus, size, and a willingness to look for a capital partner. Right? You kind of check all those buckets, and so as much as the real estate portion of the portfolio is hyper local, our company portfolio is basically the inverse. Harvest is the one Arkansas investment that we've made on the company side. The rest are scattered all over the region, from Birmingham to Minneapolis to Dallas, St. Louis. So So we want to invest in as many Arkansas businesses as we can. And I think that as we grow and mature, and then there will be more of those opportunities. Just because, just frankly getting the word out, right? That we want to be the go-to capital partner, both for real estate and company investing in the state. And that's not said in a way from a competitive standpoint as much as it is just that we want folks to know that we're out there, and that we are excited to partner with on Arkansas opportunities.
And if you had a thesis right now, where are those people going? Do they not exist? Are they going out of the state to get that money? Are they just selling to private equity and closing? What's your thesis?
They
on
definitely exist. They are primarily going out of state, or maybe they're just holding on because they don't necessarily know or that they want to exit to someone that's not local.
Gotcha.
Yeah. So for someone who's looking to invest, where I assume everyone has to be an accredited investor, and they just go to your website to reach out.
That's right. Yeah. And I'd say even if you're not, great, but just if you're wanting to learn or understand, we actually have a revamped website. We just with a little help from a friend that's off camera in the room, and so yeah, I think anyone, whether it be someone that's seeking capital, maybe looking to invest or just learn, right? The website's a great place to go. It's completely up to date, and we feel like is a great spot to learn about what we're doing as a firm.
I think one thing that could be cool, just from your perspective, while we have you here, we've obviously, Cameron already hit on, but we've talked to a lot of your partners.
Yeah,
we know from a business perspective, on paper, how you guys it makes business sense. Talk about some of the unique gifts that people don't know about Marshall or Brock. What are they really good at?
Yeah,
not just Brock's an IRA guy,
right? I think Brock is really in tune to what our because there's a lot of overlap between Greenwood Gearhart clients and Natural Capital LPs. Is really in tune to what the investor is wanting to see from us, both in a reporting standpoint, and product standpoint, but also obviously in an investment standpoint. And really helpful to me as kind of think through firm strategy. And Todd's the rah-rah guy, and I mean he's just the best, and is extremely supportive, and thoughtful when it comes to how we may attack an issue. And Marshall's kind of the rock where he can just kind of sit back and take everything in and kind of help push stuff along, but without it feeling overbearing by any means. And to have three guys that have been building businesses for a long time, after a long time before we ever started Natural Capital, to have those guys to be able to call on when I'm working through something is invaluable. We're all friends, and so working with friends is an amazing gift, and so it's just been a blessing to be able to partner with guys like that.
That's awesome. How about Rob and Ben?
Yeah. Rob, I didn't know Rob at all when we started Natural Capital. That was a relationship that Todd had, and just the integrity and determination that Rob has, and helping me learn how to take those qualities and build upon those that we already had, and seeing how he, his creativeness around deal structure, along with, the importance of relationship has been great. And then Ben and I have known each other since we worked at Stevens together, and so he's been effectively my right hand on all the investment decisions since he joined the firm. Really on the investment management since he joined the firm almost 3 years ago. So we wouldn't be here without his tenacity and attention to detail, and being able to help me get stuff done. We wouldn't be here without him.
He's a smart guy.
Yeah. All very, very bright and successful guys for sure. Yeah. And so having them as part of the firm is, it's our biggest asset.
So for back to the growth for the future, does that look like growing more people here internally as well, or is this team here?
I think so. I think we'll see additional team members over time here and in Little Rock. Yeah.
Because right now you're the only one in Little Rock.
Two other, our CFO and our Denny and our Chief Compliance Officer,
yes.
Amy, they're in Little Rock. And so the easiest way to think about it is kind of outside of Rachel she's on the IR and marketing side, but the investment team is here in Fayetteville, and the ops team is down in Little Rock. No real, just kind of a function of finding the best people.
Sure. Yeah.
It's good.
There's two questions we ask at the end of every episode. One, what our main why behind doing this is to encourage other entrepreneurs to build businesses in Northwest Arkansas. And so why, kind of a two-part for you, why build a business in Northwest Arkansas, and why invest in Northwest Arkansas?
Yeah. So I think a lot of it has to do around legacy, and we wanted to build something that we could be proud of, and that the region and the people could be proud of participating in, right? And we've so far been able to do that, where I think if you talk to both the people that we've invested with and our investors, that they're very proud to be part of kind of the natural capital ecosystem. And that is extremely gratifying to me and our partners. And so being able to do something together is really something that we're proud of, and doing something that we're from here, right? All of my partners, all of us are from Arkansas, and so that's something we're very proud of, and we can do this just like anybody else, right? And so that's been a big driving force for us as well.
And how do you define success?
Well, obviously we've got to generate returns for our investors, right? And manage those funds in a way that both from a fiduciary standpoint and that they're proud of. But there's more than that, right? We want it to be something that again, those two groups, right? The people we invest with and the people that have trusted us with their capital, that they're that they will say, yeah, we're natural capital investors, and we're proud of it, and they do a great job. And so if we can do that, then we're achieving our goals.
That's good. Well, one thing we do at the end of every episode is kind of highlight the big themes that we learned from you today. We think the people who listen are going to learn. And I think every time we've talked about natural capital, a word that's come to mind, and that was even pre this interview, but then even being part of this interview, is like pride. And I mean that in like the best way possible. Like, proud to be from the state, proud to have gone to school in the state, proud to reinvest in the state. And that's something that when we look across all the founders that we've interviewed, it makes this place special. People are proud to be from here. They're proud to be from our state. And so to hear that investment thesis, to hear the like true impact focus, like that, it solicits pride. And so that's a big word. And I think if you're a founder, if you're building something, if you're working in a business, like being proud of what you're doing can go a long way, and it can lead to some of the best results if you're really proud of what you're doing. So I think that would be like the first thing I'd start with. The second word that I'd use is focused. And I think it's funny because when we started, it was like, well, we don't have, our buy box is not, a lot of these private equity shops, it's like HVAC, or and it's not that for y'all. But you are focused in this area, in the state. Obviously, you have investments outside of it regionally. But I think the biggest focus that I heard coming out of this is we want to help people who are in Arkansas deploy capital back into the state.
Yeah.
And we want to make them returns. And I think that is a really, really neat. And even thinking back to when you guys started 2019, it doesn't sound like that really existed. Maybe if it did, it wasn't what it is now. And so thank you for that. And then the last word that I'd use is impact. And I look at, all the other people we've had on the podcast that are part of Natural Capital, like, are all very impact focused. Like, doesn't matter who they are, what their title is. If you called them, if you texted them, if you needed help with something, like, you would get that help. And it's because that you guys are all focused on impact within the state, impact within the region. And I think if you own a business, if you're trying to operate a business, if you're trying to grow a business, if you can do it with impact on the forefront, you're gonna have success. And it's clear that y'all have done that, both for investors and Natural Capital growing over time. So
Thank you.
Yeah. Thanks for your time, Brad.
Thank you.
Really appreciated having you. So
Thanks.
Brad.
sweet.